Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is the Forex Kickstart video for today's date, July 16, 2024. In the Kickstart video, I take a look at three of the major currency pairs, the Euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective, so let's get started. Retail sales came in stronger than expected, and that sent the dollar higher. What did it do from a technical perspective? Let's start by taking a look at the Euro versus US dollar. And I want to first look at the this pair on the daily chart. In trading yesterday, the price moved above the June high. That June high came in at 1.09153, and you can see the price did extend above that level, but then closed below that level on disappointment on the break. And we're seeing up and down price action today, but moved back to the downside off of the data. Taking a closer look at that from the 4-hour chart, and we look at the rise to the upside. That rise to the upside also moved above this swing area through here up to 1.0918 and failed on the break above, and then rotated to the downside. We moved back below this trend line. This trend line was broken in trading here, but failed. And yesterday yesterday it came down, tested the low of that swing of that trend line, and then rotated back to the upside. So that was more bullish. We needed to stay above that level, and as you can see, we have moved back below that level. We did move down to test the low of this swing area down here near 1.08758, and are finding some support buyers against that level. Also, if I were to just transition to the hourly chart here, you can see that the low price today also bounced off the 100-hour moving average. Going back in time, we did trade above and below it back through here in trading last week, but could not just get any headwind to the downside off any of these breaks here, and it ultimately moved based against the level here and moved higher to our high price that we saw in trading yesterday. So 100-hour moving average is proving to be a support level, a level that traders are leaning against. That level comes in currently at 1.08, around 73. Get below that level would increase the bearish bias, and have traders looking for lower levels in the Euro versus US dollar. Stay above that level. Watch at 1.00887 or the trend line again right through here, just a little bit below that level. That we need to get above those levels to show that the buyers down here against 100-hour moving average really mean business, or they're just some profit taking on the dip in the Euro versus US dollar. Let's take a look at the dollar versus yen next. We'll start off by taking a look at the 4-hour chart. And in trading yesterday, the price, again, like the Euro versus US dollar, made a break, this time to the downside. We broke below the 61.8% retracement of the last move to the upside from the June low to the July high. That break saw a little bit of selling, but only a little bit, and that forced the buyers back in after the price moved back above that level. The sellers turned to buyers and pushed the price to the upside. So bad trade for the sellers. On the top side in trading here today, the price has moved up to test the 200-bar moving average on the 4-hour chart, and we're just above that level currently at 158.785. The 200-bar moving average comes in at 158.74. If we can stay above that 200-bar moving average on the 4-hour chart, it would be more positive for this pair. But it really all started down here on the failure below the 61.8% and rotation back to the upside. So the data, though, is helping get above that 200-bar moving average. Again, stay above it would be more bullish. If we start to move back below that level, watch the 50% retracement level. You can see how that 50% retracement did hold support right here on the dip. We also use that level as resistance right here at the beginning of the week. So resistance and support. We'll see how that 50% retracement does on any dip back below the 200-bar moving average, and we are trading just right around that 200-bar moving average as I speak. Finally, let's take a look at the sterling versus US dollar. I want to start by taking a look at the daily chart. Why? Because if you go back to this point right here, this was the corrective swing high after the peak for 2023. That swing high came in at 1.2995, and the high price that we saw in trading yesterday came right up to that 1.2995 level and found willing sellers against that level. So keep that in mind. I kept the sellers in play and made the buyers a little bit hesitant. Taking a look at the hourly chart, you can see how the price fell off of that level in trading yesterday and closed down lower. We did move to the downside and then back up. We do have CPI data, by the way, in the UK tomorrow, but found resistance sellers near the 80 level ahead of that high price resistance, and the move to the downside off the retail sales has now taken the price back down toward its 100-hour moving average, but short of it, whereas the euro versus US dollar came down to the 100-hour moving average. Sterling versus US dollar is finding earlier buyers against that level. The 100-hour moving average comes in at 129.27. A move below that level would open the door for further selling. Also, like the euro back here, the last time the price tested that 100-hour moving average, was traded above and below it. But in the case of the sterling versus US dollar, the dips below the 100-hour moving average were short-lived before this sharp move rise to the upside. So the pound is leading the way ahead of the euro, and that may be reflective in the buyers against the 100-hour moving average coming in a little bit earlier versus the euro versus US dollar. Nevertheless, this level is going to be key for traders. It's going to be a key barometer. As long as the price remains above that level, the buyers are still in play. If we do continue this run to the downside after the retail sales data, then and break below that level, we'll look toward the 38.2% retracement. That's always the minimum retracement. That's of the last move to the upside. I like to see the price extend down to the 38.2 to show that the sellers really mean business. If they can't do that, then this is just a modest correction in what is more of a bullish market for the pound versus US dollar. So be aware of that. But certainly the price action is a little bit more to the downside after the retail sales data. So that's my Kickstart video. Take a look at 3 of the major currency pairs. Dollar is stronger. We'll see if that strength can continue as we stretch for other targets in the major currency pairs. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.